Click the bell icon to get latest videos from Ekeeda.
Hello friends, myself Professor Uday Bokre and now I am welcoming you on your own YouTube channel Ekeeda. Friends, if you are watching this channel first time, I request you to subscribe to our channel Ekeeda and also press bell icon for your latest notifications. Friends, on this channel we are learning course of CA Inter. In CA Inter Advanced Accountancy, topic name Internal Reconstruction, we are doing currently question number 4 which is on your screen. Let's see the question. The balance sheet of Vaibhav Limited as on 31st March 2000 X1 is as follows. Equity shares of 100 each. Amount is 2 crore, that is 2 lakh equity shares of rupees 100 each. 6% cumulative preference shares of rupees 100 each. So it will be 1 lakh preference shares of 100 each. 5% debentures of 100 each. Amount is 80 lakhs. Creditors 1 crore. Provision for tax is 2 lakhs. Asset side, we have a short and sweet asset side. Fixed asset 2 crore 50 lakhs. Investment having a market value of 19 lakhs but book value is 20 lakhs. Friends, if we have a surplus and if we get the opportunity, we will try to reduce the investments by rupees 1 lakh to reflect its true value. Current assets are given 2 crore and P&L account debit balance is 12 lakhs. So our main target is to wipe off this debit balance of profit and loss account. Friends, let's see the next information which is available. The following scheme of internal reconstruction is sanctioned. All the existing equity shares are reduced to rupees 40 each. Your existing equity shares are of rupees 100 each. They are reduced to rupees 40. Means can't I say they are reduced by rupees 60? Unless otherwise given, it is always face value and paid up value both are reduced. So we'll pass the gross entry here. Then they are saying all preference shares are reduced to rupees 60. So I can say they are reduced by rupees 40. The rate of interest on debentures increased to 6%. To existing debentures ka interest rate is 5%. It is changed or increased to 6%. So I can say old debenture account debit to new debenture and amount is of course same at the minute. We will see if there is any other information is provided. The debenture holders surrender their existing debenture of 100 and exchange the same for a fresh debentures of 70 each for every debenture held by them. Now you can understand that we are increasing the interest rate, but on the other end they are reducing their value to rupees 70. So there is some amount which is waived by them which will be transferred to capital reduction. Fixed assets are written down by 20%. Current assets are to be revalued at rupees 90 lakhs. Present value of current asset is 2 crore. They are revalued at 90 lakhs. That means 1 crore 10 lakhs is reduced from your current assets. Investments are to be brought to their market value. I hope you remember I told you that if funds are available, we will reduce it. Now the question is also saying that, so we'll follow that. Let's see the next information. One of the creditor of company to whom company owes rupees 40 lakhs decided to forego 40% of his claim. So I can say he is foregoing 16 lakhs rupees from you. The creditor is allotted with 6,000 equity shares of rupees 40 each in full and final settlement of his claim. उसको हम लोगों ने क्या दिया? We have given him 60,000 equity shares of 40 each in full settlement of his claim. The taxation liability is to be settled at rupees 3 lakhs, means it is paid also 3 lakhs. It is decided to write off debit balance of P&L account. That we are going to do. Pass journal entries and show balance sheet of the company after giving effect to the above transactions. Let's see the journal. Let's prepare the format of journal. Friends, we are ready with the format of journal. Let us pass journal entries for each of the transaction. All existing equity shares are reduced to rupees 40 each. So we have to pass a gross entry. Equity shares rupees 100 account debit to equity shares rupees 40 account. Number of shares will be 2 lakhs. Friends, you can notice the entry. Equity share capital rupees 100 account debit. 2 lakh shares of rupees 100 each. Amount is 2 crore. To equity share capital rupees 40. That is 2 lakh equity shares of rupees 40 each. Amount comes to 80 lakhs. And balance amount we have transferred to capital reduction account. It is your gain for the company. In this way we have completed our first transaction. Let us see the second transaction. Next transaction, all preference shares are reduced to rupees 60 each. You can notice earlier preference shares are of rupees 100 each. They are reduced to 60, means they are reduced by 40. That 40 rupees we will transfer to capital reduction account. Since face value, paid up value both are changed, I can say my entry will be a gross entry, that is 100 rupees preference share capital account debit to 60 rupees preference share capital account, and the difference we will transfer to capital reduction. Number of shares will remain same. Let us pass the entry. Friends, you can notice our entry. 6% preference share capital rupees 100 account debit. There were 1 lakh shares of 100 each, 1 crore. New preference share capital will be of rupees 60 each. So to 6% preference share capital account rupees 60 wala is credited. Total shares will be again 1 lakh, but now face value will be 60. Face and paid up value both will be 60. Difference amount we have transferred to capital reduction account. In this way, we have completed this entry. Narration is being face value of preference shares reduced to rupees 60 each. Let us see the next transaction. The rate of interest on debenture increased to 6%. First of all, your existing debenture interest rate is 5%. But we have changed it to 6%. डिवेंचर होल्डर्स सरेंडर देयर एग्जिस्टिंग डिवेंचर्स ऑफ 100 ईच, वो आपको पुराने डिवेंचर्स आपको देंगे 100 ईच, एंड एक्सचेंज द सेम फॉर द फ्रेश डिवेंचर्स of rupees 70 each. In this way, they have sacrificed 30 rupees per debenture for every debenture held by them. So they will get equivalent number of new debentures. So your entry will be old debentures, that is 5% debentures rupees 100 account debit to 6% debentures rupees 70 account credit, and the difference you will transfer to capital reduction. Let's pass the entry. Continue. Friends, you can notice our entry. 5% debentures of 100 each, amount was 80 lakhs, so it must be 80,000 debentures of 100 each. In exchange of that, we gave them 6% debentures which were of 70 each, so 80,000 into 70 comes to 56 lakhs, and the remaining amount we have transferred to capital reduction account, which is 24 lakhs. Friends, in this way we have completed the entry for settlement of debenture holder. Narration is being interest rate on debenture increased to 6% and face value reduced to rupees 70 each. Let's see the next transaction. Let's see information number 4. Fixed assets are written down by 20%, means fixed assets are reduced by 20%. Amount of fixed asset is 2 crore 50 lakhs, so 20% comes to 50 lakhs. So it is reduced by 50 lakhs. So your entry will be capital reduction account debit to fixed asset account 50 lakhs. Friends, let us see the entry. Capital reduction account debit to fixed asset account, ये entry मैंने discuss किया था. 2 crore 50 lakhs multiply by 20% comes to 50 lakhs. In this way, fixed assets are reduced. So your narration is being fixed assets written off by 20%. Let's see the next entry. Current assets are to be revalued at rupees 90 lakhs. Look at the amount of current assets. It is 2 crore. It is revalued at 90 lakhs, means it is reduced by 1 crore 10 lakhs. So friend, entry is what? Current assets will be credited because asset hai. And which account we will debit? Only one account, which is decided, capital reduction account. So my entry will be capital reduction account debit to current assets account 1 crore 10 lakhs. Friends, you can notice our entry is capital reduction account debit to current assets, being current assets written off. You can notice, student, the amount written off is 1 crore 10 lakhs because book value was 2 crore, but it is revalued at 90 lakhs. In this way, we have reduced our current assets and narration is being current assets written off. Let's see the next transaction. Investments are brought to their market value. Look at the investments book value 20 lakhs. What is the market value? 19 lakhs. So I can say it is reduced or written off by rupees 1 lakh. So my entry will be investment account credit, of course. Which account will be debited? Capital reduction account, which is for loss. So entry will be capital reduction account debit to investment account. Amount will be 1 lakh. And how 1 lakh will be arrived at? 20 lakhs minus 19 lakhs. Let's pass the entry. Friends, so you can notice our entry is capital reduction account debit to investment account, being investment reduced to market value. Book value was 20 lakhs, but we reduced it to rupees 19 lakhs. So these 19 lakhs will appear in our balance sheet. Let's see the next transaction. Number 7 transaction. One of the creditor of company to whom company owes 40 lakhs rupees. he decided to forego 40% of his claim. So I can say he is foregoing 16 lakhs rupees. So I can say his remaining claim is 24 lakhs. Remaining claim is 24 lakhs. The creditor is allotted with 60,000 equity shares of 40 each. This comes to 24 lakhs in full and final settlement of his claim. So I can say my creditors of rupees 40 lakhs are settled. 40% he has foregone and remaining amount you are giving by issue of shares. Let us pass the entry for that. Friends, you can notice the entry. Creditors account debit 40 lakhs. To capital reduction account 40% amount he waived. Amount comes to 16 lakhs. Remaining amount is 24 lakhs which is paid by way of equity shares of rupees 40 each, for which narration we are writing now. Narration is being settlement of creditor. So 40 lakhs worth of creditors are now settled. Let us move on to the next transaction. Friends, let's see the next transaction. Taxation liability is to be settled at rupees 3 lakhs. Settled means it is also paid. As I discussed earlier, your liability amount is 2 lakhs. Rather, it is provided for 2 lakhs. Let me show you the question. Your provision for tax is just 2 lakhs. But how much amount is to be settled? 3 lakhs. Means it is paid. It is paid out of what? Current assets. Bank account is already a part of this. So I will do that. I will credit to the bank account which is also current asset. So my entry will be provision for tax account debit 2 lakhs. Extra whatever I am paying 1 lakh, that will be debited to capital reduction account, to bank account 3 lakhs. In this way I will pass my entry. Let us record that entry, students. Friends, let us see the entry what I have recorded. Provision for tax account debit 2 lakhs. Already provision was there. Money extra paid by you is debited to capital reduction account, to bank account which is already a part of current asset. Amount credited is 3 lakhs. Being taxation liability settled, so we have settled our taxation liability. Let us see the next transaction. Friends, now you can notice it is decided to write off debit balance of profit and loss account. Rather, scheme is implemented for this purpose only. My entry will be capital reduction account debit to profit and loss account. Let us pass the entry. Friends, let's see the entry. Capital reduction account debit to P&L account 12 lakhs rupees, being debit balance of profit and loss account written off. Friends, now it is time to see is there any difference in capital reduction account. So I need to prepare a small working note for capital reduction account which I am preparing here only. Friends, you can notice I prepared a capital reduction account. Here I have just posted the amount on debit and credit side of your capital reduction account. When I closed the account, I found that credit side is heavier and the difference amount on debit side is 26 lakhs, which is your capital profit which you will transfer to capital reserve. So let us pass the last entry for this particular question, entry number 10 for capital reduction account debit to capital reserve account. So let us record the entry. Friends, you can notice our last entry, capital reduction account debit to capital reserve account 26 lakhs. In this way we have completed journal part. Now friends, we have to prepare a balance sheet, and before I begin with the balance sheet, some important workings I will keep in my mind. That is how current assets, that is bank balance, will be placed. Then I will also decide how equity share numbers will be calculated. So these small two things I will try to decide on paper, so that while preparing the balance sheet there will be a great help. Let us prepare a small workings for these two things. Continue. Friends, you can notice my existing current assets before I begin with the reconstruction, it was 20 lakhs. Then we revalued it at rupees 90 lakhs. Out of that, tax liability is settled rupees 3 lakhs. So my remaining current asset which will appear in my balance sheet will be 87 lakhs. So this will appear in our balance sheet. So it is a small working note for that. Let's see one more working note for equity shares to be placed in our balance sheet. Friends, we are ready with the working note of equity shares. Original equity shares were 2 lakhs of rupees 100 each. Those were reduced or converted into 40 rupees shares. Number of shares were 2 lakhs only. Further, we issued equity shares to creditors. 60,000 shares were issued of rupees 40 each. These are the shares issued for consideration other than cash. And thereafter, my total number of equity shares to be disclosed in the balance sheet will be 2,60,000 shares of rupees 40 each. Preference shares, we have just changed the face value. There is no further change in preference shares. So same number of preference shares will be there, but with the new face value of rupees 60. Keeping those all things in the mind, we will draw the balance sheet of the company. While preparing the balance sheet, we will take care that if there is only single item, we will directly write in the balance sheet. But if there are multiple items to be disclosed in particular head, then we will prepare a note. But for shares, lastly rather, for shares, we will prepare a note. Let us start with the preparation of balance sheet now. Friends, you can notice I have drawn this balance sheet, and while writing this, I ensure that if there is only one item, I will directly write it over here. Let me show you that. Your balance sheet heading is Vaibhav Limited and reduced, which is required as per the law. Balance sheet as on 31st of March 20x1 after reconstruction is provided to you. Equity and liabilities is your first part where you write shareholders fund. In that, A, share capital, B, reserves and surplus. In reserve surplus, you can understand we have already done working note, and in that working note we have found that there is a capital reserve of rupees 26 lakhs. We prepared a working note of capital reduction account. For that purpose, you must be remembering our last entry. Non-current liability will include a long-term borrowing, which is 6% debentures. You can notice our entry number 3. For this, we have issued new debentures 56 lakhs. Current liabilities include trade payable, which is creditors. Amount is 60 lakh because earlier it was 1 crore. Of that, 40 lakh was settled. That you can notice from our entries. In this way, there are only single items, so I have not prepared any note. Asset side, we have a non-current asset. In that, tangible fixed assets we are there. Number 1, there is non-current asset. Under non-current asset, we have a fixed asset. Under fixed asset, we have a tangible fixed asset, which were originally 2 crore 50 lakhs, of which 50 lakh was written off. So in balance sheet, continued amount is 2 crore. Non-current investment were revalued at a market value, and amount is 19 lakhs. This entry also you can notice in our journal. Current assets are revised at rupees 87 lakh, for which we already understood one working note. So in this way we have completed everything, but only one note we need to prepare. That is a note forming a part of balance sheet. Note number 1 for share capital that we are preparing. Friends, you can notice I have prepared a notes forming part of account. 1 number note, share capital. Authorized we don't know, so we have put a question mark. Issued, subscribed and paid up. For which purpose we need to see our working note. In our working note, we decided how many equity shares which will come in our balance sheet. Friends, you can notice there are 2,60,000 shares of rupees 40 each which will appear in the balance sheet. Of those, 60,000 were issued to the creditors for settlement. Therefore, these shares are issued for consideration other than cash, for which I will definitely write a note. Firstly, let me write 2,60,000 equity shares of rupees 40 each. Friends, you can notice 2,60,000 equity shares of rupees 40 each. Amount is 1 crore 4 lakhs. Of the above, 60,000 equity shares were issued for the consideration other than cash. For this, I need to check my journal entry where I have changed the face value of the preference shares. Let me show you that entry. Can you notice here, students, entry number 2, how many shares will come in the balance sheet? 1 lakh preference shares of rupees 60 each. 60 lakhs will come in your balance sheet. Percentage of dividend is same, so I will note down this in my balance sheet now. Friends, you can notice I have written 1 lakh 6% preference shares of 60 each, and in this way my total of the share capital is 1 crore 64 lakhs, which I will place in my balance sheet. Continue. Friends, I have written share capital here 1 crore 64 lakhs. After writing this, my balance sheet total is 3 crore 6 lakhs. And asset side is already taken care. 3 crore 6 lakhs is the total of the asset side. Friends, you can understand question was very easy, but length is too big because of the format. Friend, this question is very easy. In exam, this kind of example you need to solve to gain the full marks, because there is no chances of errors in this kind of examples. I hope you must have understood this entire solution, but still if there are any doubts, please put in the comment box. Before I close today's video, I request you to share this video with your friends for their benefit. Before I close the video, I request you to please like our channel Ekeeda. Please subscribe to our channel Ekeeda and also press bell icon for your latest notification, friends. Thank you for watching this video. God bless you all.